Okay, my beautiful friends, here we go. Get ready, because this is my newest segment, and it's going to be lovely. Markets, a look ahead here. It is Sunday, August 30th, 2020. All right, people, I've been pondering this market, obviously. I do this pretty much 24/7, which makes me deranged. But again, let's put this into perspective. Let's get ourselves on the right side here. Let's try to keep ourselves on the right side here moving forward, because that's what this is all about. Everything else is conversation. I don't care. All right, so let's do that here. What's going on? Right now, as of Friday, new record highs for the stock market. We're in some kind of a melt-up mode, which is ironic because I wrote an article for the Trends Journal. It came out last Tuesday, and the title of that was Melt Up, Crash Down. And we're clearly in this melt up mode here. Fear of missing out, irrational exuberance has driven this market where no man or no woman has gone before. And that's just lovely, isn't it? Okay, what does it mean here? And where are the clues as to where this market is going to go here in the short run? Long run, we know where this is going. All of this is going to correct to fair value at one time. I don't know when. I don't care when at all. My job is to keep you and, of course, myself on the right side of this market. And I've done an outstanding job of that, I would have to say, and I would imagine most of you would agree. So, understanding that now this market is again in record territory with regard to the S&P 500 and NASDAQ. Dow Jones Industrial Average is still a laggard here. The Russell 2000 is still a laggard here. But the broader market is just stupid. Now, because it's so stupid, what does that mean? That means that the stock market is now massively overowned. It is massively overowned. But what does this tell us? Does this mean, because this market is massively overowned, and I mean massively, greed has taken over the market? Does that mean that the market's guaranteed to drop tomorrow or into the week? No, there is no guarantee whatsoever, but we have clues. We're going to talk about those clues in a minute. In my view, in my hope, I guess, I would love to see this market bleed off a little bit. Nothing goes straight up without having a little bit of a pullback here and there. So profit taking, something along those lines here. But the mechanism behind this market is, well, it's very powerful. Let's talk about that so we can get some clues here. We understand that we have a Federal Reserve that will backstop the market. No matter what's coming down the pike, the Fed is going to buy it. The Fed is in full control of the market. We have a managed market to the highest order at this particular time. Suppressed rates have driven epic sums of cash into places where it had nowhere to go. In other words, it should have been going into other assets, but no. Because the rates have been suppressed and will continue to be infinitely, according to the Federal Reserve, that's going to attempt to push more cash into the stock market, hyperinflating a bubble in the stock market on the back of a Frankenstein bubble, which is the debt market. Okay, we understand that. Where are some other clues here? So again, market massively overowned. The dollar is a dying asset in its current form. New dollar is there. It's already done. Completely ready to go. It's just a matter of how they are going to release it to the public, okay? The public is not going to like an all digital dollar. They're not going to like looking in their wallet and seeing a few dollars in there and realizing that these are now wallpaper, okay? People like to hold on to things like, like tangible things. So, again, even though the dollar right now is just digits on the screen for the most part. I mean, if you go to the Federal Reserve's website, There only exists on the planet Earth about $1.9 trillion in actual printed cash. The rest of it is digital already. And if you add in dollar derivatives here, we're looking at a sum in the quadrillions. No one is actually smart enough to know how big it is, because again, when you look at any asset, okay, let me set the stage here for you. When you look at any asset that has derivatives behind it, and it could be a stock, of course it could be a currency, the dollar especially, there are layers and layers and layers and layers of derivatives. There are side bets, a side bet on a side bet, a side bet on a side bet, a side bet on a side bet, and this can go on infinitely. So no one's smart enough to know how big the dollar derivative market is. It's in the quadrillions, that we do know, and whatever may come after that. But understanding the environment we are in, the dollar is getting decimated. Okay, the Dixie has been plummeting. I have a target, a short-term target on the Dixie of 91. I think most of you know that, and my targets generally tend to get hit. That's the truth. We'll see. I would not be surprised to see the dollar index drop into the 80s also relatively soon, but we'll take it one step at a time. So what does it mean for the stock market? And keep in mind, it's massively overowned. What does it mean if the dollar continues to get decimated? Well, it means that it will reflect in the stock market gaining, because it takes more weaker dollars to buy anything, even shares of stock. And the stock market is priced in US dollars. You understand? Very, very simple. It's an illusion. It's an illusion. Now, we also understand that the Fed is going to print, create cash out of thin air. They just promised to do this into oblivion. They're going to attempt to create inflation in an environment where the economy is dead. We have a dead economy, and the lies, the propaganda, the misinformation is becoming beyond asinine. Larry Kudlow, V-shaped recovery. President Trump, super V. We are in no recovery whatsoever. We just had Fed President James Bullard said the recession is over, parroting what Larry Kudlow just said. Are you kidding me? But this is what they're trying to sell you. Okay, it's always a game of what can they sell you? What can they cause you to believe to be true? Okay? And we all understand, look, you can believe people like Larry Kudlow, you can believe people like Donald Trump, you can believe people like a Fed president, all on the same page here, who have consistently lied to you, and it's just unbelievable. You can listen to a guy like me, who has never lied to you once. All right, so you decide who you think is more truthful. Who's more truthful, me or those characters? I want to hear from you. All right, so market massively overowned. We have a dollar under pressure. A debt market, the 10-year yield right now is 0.72. Okay. Understand this. Okay, there is a compensatory mechanism going on here between the 10-year yield and the weaker dollar. Now, what does that mean? How can I put this into an easy to understand perspective for you? I think it's pretty simple. The weaker dollar, as we understand, is stock market positive. The 10-year yield, where it is, 0.72, has been stuck in a range here. Even if it were to drop into like 0.68, maybe even 6.7, as long as the dollar stays in its downward spiral, this is again stock market positive, but that does not mean that we shouldn't see at least some kind of profit taking here. Fear and greed drive the markets. So let's try to put this together again with one more element. I know I'm getting a little ahead of myself here. Maybe it's getting confusing, but let's talk about energy. Energy here is a massive driver for the stock market. We all know that. The energy sector, one of the largest sectors of the market. If they can prop up the energy sector, it also tends to be stock market positive. Crude oil has been also hovering in a range for quite a while. We understand, and this just came out, that President Trump just walked back emission standards for oil and gas companies. This is a boon to oil and gas companies who will more than likely now get bid higher. What does that do? pushes the energy sector higher. Also, stock market positive. You understand? Doesn't matter if we're being poisoned by the environment or we're killing our planet. What's more important right now is to prop up oil and gas, at least to the Trump administration. Okay? Am I beating up the president here? You decide. I don't know. What's important to you? Oil and gas companies or our environment? You decide. All right? Anyway. So again, let's put this together. All right? $1 cratering. A 10-year yield, 0.72. Understanding the compensatory mechanism I just told you with regard to the dollar and the debt market, more specifically the 10-year yield. Okay. Stock market positive, no doubt about it. Oil and gas. This is positive for the market too after what just happened. So, market over-owned. An over-owned market is actually bullish, people. Okay, it doesn't mean we're going to get a correction right away. We also have to figure out one more thing. Let me throw this into the little equation. September here, which we're going into, has been a tricky month for the market. And again, with the market where it is, well, what would you expect to happen? You would expect to see a market maybe give back a little bit. Okay. What we need to look at, I think, and understand is we have a market where no man or no woman has gone before. We have $1 getting hit pretty badly. A 10-year yield, obviously suppressed rates, and it's going to go on forever. Oil and gas, which will probably get propped up. And that's also good for the financial sector. It all plays in together. So, putting this all together, stocks can go higher here. Stocks can go higher here despite the fact that the market's massively overowned. Despite the fact that it should give back a little bit here. Again, I would be thrilled to see this market drop a couple hundred points this week. The Dow, I mean, I really would. I have not one open position right now. Not one. I'm completely in cash. So what am I going to do tomorrow? What's Greg Mannarino going to do tomorrow in this market? Well, number one, you will know exactly what I'm doing, when I'm doing it, and all you got to do is subscribe to my free newsletter, 100% free. There is a link in the description of this video. What I'm going to do tomorrow when I wake up is I'm going to look at the 10-year yield, I'm going to look at the dollar, all right? I'm not even going to look at the market. That's what I'm going to do. So once I see the action here with regard to the dollar, is the dollar getting bid higher? Is the dollar falling? Is the 10-year yield staying where it is? Is it rising? Is it falling? That's going to make my decision for me whether or not I'm going to enter into the market at all, whether or not I'm going to buy calls, or whether or not I'm going to buy puts. After I ascertain what's going on here with regard to the debt market and the dollar, then I will make up my own mind. On my website, traderschoice.net, I put up, it's right there for you. It's a beautiful chart which shows you the relationship of the dollar, 10-year yield, what they do, and how the market should respond. Okay, this is not lockstep. It's not chiseled in stone. However, it's proven to be true about 95% of the time, which is pretty darn good. So take advantage of these things, people. Okay, so if you want to see what that looks like, again, just click on the link to my website. If you want to know what I'm going to do with regard to this market, well, just go to get my newsletter, and I will send reports out to you in real time. I will not let you lose. I will never let you lose. You know that. I've got your back. I really do. All right, look, with that said, kind of a long video here, but I covered a lot of things here. I think this video has been very important. I'm going to ask you, if you're one of my lions or someone that likes me even just a little bit, please share this video. Get it out there. Let's get more people together here because, look, their job is to destroy us. You understand that? My job is to not let that happen, and it's not going to. All right? Love you a lot. Share the video. See you later.